percent. That's the most, or biggest decline, I should say, since 2008. Having said that, Raymond James, who also did a downgrade to market perform from outperform, they said the magnitude of the shortfall is concerning, especially coming so closely after the optimistic tone struck on September's Investor Day. I mean, were they optimistic? And then, like, to see this number, it's like, how do you reconcile it?
Yeah, I think so. And that Investor Day was, of course, before the launch of the new soccer game. And I think they were tracking. I think basically what happened with that game is that it launched to mixed results, and then players it wasn't as sticky for players. Players weren't spending quite as much as EA expected. And then the other thing that happened, this is a smaller part of the equation, but it's still substantial enough that EA mentioned it, which is that their other big new title, Dragon Age: The Veilguard, another one that really does not roll off the tongue. That new game, EA said, reached 1.5 million players, which was a miss of 50% off their targets. And I think there's an argument to be made that them expecting 3 million players for that game might have been a little too ambitious, but still, that is a huge miss, 50%. And I think that that also played a role.
I just want to clarify for those who are listening and watching, the 25% decline was back in 1999. So the decline that we're seeing is significant today. But again, that 17% decline in EA right now is pretty much at its lows of the session. The lows were almost 19%, so still about 17. That 25% decline, though, back in 1999.
Jason, I'm so interested in these games that you called the Live Forever games. They're the ones that are continually updated. GTA Online, Minecraft, Fortnite. So you have like a winner like Epic Games. Does EA have one of these games that lives forever?
EA has Apex Legends, which has done incredibly well for them over the years. It is a little bit old at this point. It came out in 2019 or 2018, I believe. So not quite as, and it's never been as humongous as Fortnite. So still substantial, but not like a company saver the way that a game like Fortnite is. EA also has the sports titles, which are not live service because players have to buy new ones every year, but they do have dedicated fan bases who kind of stick with those games. You have a substantial number of players who are pretty much only buying the new Madden game or the new soccer game every single year. So EA has its own kind of versions of that, but no, it has not found a winner quite as big as Fortnite.
All right, we're going to have to leave it there. Jason, thanks so much for joining us on the EA News. Certainly one of my decliners today, Carol. Once again, shares of EA down about 17%. Jason Schreier joining us from New York City. His latest book, Play Nice, The Rise, Fall, and Future of Blizzard Entertainment.
All right, just want to bring your attention to some headlines crossing the Bloomberg terminal. It has to do with United Health Group. They are promoting the head of its Medicare health plan business to lead the company's broader insurance division. So they are filling the job previously held by Slain executive Brian Thompson. So again, filling that position. Tim Knoll, currently chief executive of United Health's Medicare division, will become CEO of the United Healthcare business. The company putting that out in an email statement. You might recall, of course you recall, Thompson being fatally shot here in New York City outside the company's investor conference. That was last month. And that, of course, set off a days-long manhunt and raised security concerns across the business world.
Some other breaking news, too, that we want to get to. President Donald Trump said he signed executive actions related to cryptocurrency and AI. It's moves that could bolster two nascent industries. He was joined at the White House by AI and crypto czar David Sachs. No further details about the actions were immediately available.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. As we have been reporting, United Health Group has promoted the head of its Medicare health plan business to lead the company's broader insurance division, filling the job previously held by Slane executive Brian Thompson. Now, Tim Noel, who is currently CEO of United Health's Medicare division, will become the CEO of the United Healthcare business. Thompson was fatally shot in New York outside the company's investor conference last month. Shares of United Health, they are advancing now, up by 1.6%. The Dow, the S&P, they're both higher. NASDAQ in the red. We've got just about 38 minutes to go ahead of the closing bell. S&P right now at 6102. Could see a record close, up 16, a gain of 0.3%. The Dow up 341, up 0.8%, and NASDAQ now lower by 0.1%. 10-year, 4.63%. The 2-year, 4.28%. Gold down $2.50 the ounce, 27.53, and West Texas Intermediate crude oil down now by 1.3%. Again, recapping, U.S. stocks moving higher with the S&P up 16, up by about 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update. Do appreciate it. AI and jobs, Carol, the relationship and what it looks like going forward. We talk about it all the time.
We do, a lot, and trying to make sense. Is it going to be complementary, helpful, more productive, or is it going to take our jobs?
Okay, well, speaking of that,
Yeah.
Earlier this month, the team over at Bloomberg Intelligence put out a report that said global banks will cut as many as 200,000 jobs in the next 3 to 5 years as AI encroaches on tasks currently carried out by human workers. Needless to say, workers are trying to figure out their place in the world of AI, and economists and behaviorists have their work cut out for them.
Yeah, one of them working on that is Kelly Monahan. She's an organizational behaviorist who is managing director of the Upwork Research Institute. That's the research arm of the platform Upwork, which matches talent with companies. She joins us right now from Orlando, Florida. Nice to have you back with us, Kelly. How are you?
I'm doing great. It's great to see you guys again.
Yeah, it's great to see you as well. How are you thinking about AI and the relationship with how we work and what it means for jobs that might be replaced and new jobs that might be created?
Yeah, at Upwork, we're seeing this fascinating demand curve happen. So if we look at back in November 2022, when ChatGPT, I think, took the world by storm, what we saw happening within our labor market at Upwork was these general searches. So prompt engineering, ChatGPT, generative AI. If I'm going to be honest, I don't think many business leaders quite even understood what they were asking for. Fast forward to where we are today, early 2025, we see a much more mature market happening on our platform. And what that's meaning from a job task perspective is that freelancers today are having to become much more specialized. We realize generative AI is actually all about the data quality on the back end, and then being able to visualize it on the front end so leaders can actually do something with it. And so as a result of that, we're seeing much more specialized demand take place on our platform today.
Okay, so how do freelancers do that? What's the best way for them to make themselves, I don't want to say immune, but adjust to this new world? How do they become more specialized?
Yeah, that's a great question. So what we see happening, let's take machine learning as an example. That's always been a category on our platform for the last several years. But what freelancers are doing is becoming more specialized with that and adapting to the new tool of generative AI and beginning to develop those skill sets of data annotation, data labeling as examples, or knowledge representation we see growing on our platform, which simply means being able to make patterns and sense of the data within their organization. And so freelancers, I think what you see is those that are traditionally trained in data science and machine learning are really adapting and evolving and understanding what does that mean in light of generative AI and this new tool that they have now at their disposal.
I mean, who are these people? Are they were there and they're just fine-tuning their skills, or all of a sudden people are running out and getting trained? Like, who are these people that are now maybe considered part of the AI workforce? Well, we know AI has been around for a while.
Yeah, so what we see is two things. Absolutely, these are freelancers who've been on our platform for a while, who again have been, what we call now traditional AI, have been working in this domain for a while, and they're becoming much more in demand as they're adapting to new generative AI. In fact, like from a wage perspective, we're seeing those same data scientists who are now working alongside generative AI models command a 22% increase in their work, which I think is great. But But we're also seeing new freelancers come into our platform, especially from the younger generation. And our survey work, we continue to see Gen Z in particular tell us that they prefer utilizing these, top skills that they have coming out of college and see much more stability in today's labor market by managing our portfolio of work. And so we're seeing a lot of new entries as well, especially from the younger generation on our platform.
What about from companies?
Yeah, from like a demand perspective.
Yeah,
because
you're a two-sided market. You serve,
Yes.
You serve the folks who are looking for work, and you also serve the folks who are looking for those folks.
Yeah,
so,
absolutely.
where are you seeing them adjust the way they're describing what they're looking for, the talent that they think they need, that sort of thing?
Yeah. So, one of the things that we haven't published, but that I see within our online platform, which is pretty exciting, is oftentimes as you think about Upwork and the demand, we see that a lot in our small and medium-sized middle market. But where we actually see some of the fastest growth right now for generative AI from a demand perspective is at larger companies. So larger enterprises. And in fact, like from an executive perspective, they're telling us about 1 in 2 executives today are actually turning to freelancers within these larger organizations to solve what they believe is an AI skills gap within their organizations. So as another example, only about 30% of full-time employees today say they're ready and willing and able to work alongside AI. And that's becoming a growing skills gap. We talk a lot about tech debt within organizations from an IT perspective. I don't know if we're talking enough about the skills debt that's within many of our organizations today as this technology rapidly, evolves and increases in demand. And I see those executives churning to freelancers to help fill that within their organizations.
Why aren't they hiring them full-time? If AI is such the thing going forward and everybody's investing and is all in, why aren't they hiring full-time AI people?
I think there's 2 reasons for that. One, it's really tough because from an AI perspective, the job, like from a unit of analysis, jobs are going to, I think, fall behind. We see it's much easier to think about it from a project perspective, a task and skill perspective, because it's so new and so emergent. I'm not even sure a lot of executives know what that full-time role actually looks like today, but they certainly know they need the project or the skill set in place. And that just makes it a natural extension for freelancers, a much more natural fit. And then if we're going to be honest with you, we're in a tight job market right now. I still think executives today are hedging when it comes to full-time hiring as they, begin to navigate this market. And instead, we see much more bullish sentiment in tight labor markets. Again, about 1 to 2 executives who plan to increase hiring for freelancers. And it really helps hedge their balance sheets as they go into 2025.
Why do you think I need to turn on the mic here.
Maybe,
sometimes.
With AI
would just recognize when the mic needs to go on.
I was worried I was talking to AI right there.
Yeah, it would be better. It would be better than me at that. I do wonder, though, about this tight labor market. Have you seen the tight labor market that you described? Because certainly we're not seeing it as tight as it was at the height of the pandemic, or not the height of the pandemic, but height of post-pandemic, I should say. Where specifically are you seeing it tight? Because you talk to some folks out there, at least anecdotally, and we're also seeing this in the numbers that come from the government, but it's not as tight as it was, and folks who are looking for work, and this is anecdotal, it can be pretty tough out there, especially for recent college grads.
Yep. So I think we're in a transitional labor market right now, and we see this anytime that technology becomes disruptive. And to your point, coming out of the pandemic, we were in an unusual time with customer behavior habits at all-time high when it came to technology companies and buying habits online. And so I think we got out of balance pretty quickly during the pandemic, and I think we've now resumed to somewhat of a normal market. But we continue to see disruption, whether it's the LA wildfires. I'm here in Florida. We saw snow for the first time in a while. And so we continue to see this climate disruption as well that I think is influencing a lot of the data that we continue to see. And so I think we're in a transitional period. I think companies are still trying to figure out, what does AI mean for the business? What sorts of talent and skills do they need within their organizations? And I think you see some hedging going on, especially in the tech space, as they begin to right-size their organizations for the demand that's actually there today, post-pandemic, as well as figuring out what is the AI development and research that I need to have done. And that's certainly an investment. And I think, again, this is where, from an Upwork perspective, we benefit from in tight labor markets. Freelance begins to be on the rise when we see markets such as this.
One thing I wanted to ask you, Kelly, is now that Donald Trump is, first week in office, he's been pretty busy. And one of the first moves that we saw really kind of had to do with affirmative action and specifically DEI initiatives, diversity, equity, and inclusion, and basically ending that for programs throughout the federal government. We're also talking about government contractors. And I am curious, since you are at this great intersection of workers and companies, how that might impact their hiring, if at all.
Yeah. We actually just released a book yesterday.
Congratulations.
It's called Essential. Thank you. Yes. And because, I mean, again, it's been an amazing week to see all the changes that are taking place. I mean, I can tell you from the research, the bottom line is higher performing companies are those that have diverse talent pools. I mean, innovation comes from diversity. I think that's been pretty well proven time and time again in the research. And so the question is going to be for companies. This is no longer going to be a requirement. It's not going to be regulated by the government. And it's going to be up to leaders now to make that choice. If they want to maintain a competitive, innovative environment, diversity still has to be a cornerstone of how they operate. And so, you know, in some ways, I'm optimistic that some leaders are going to be on the right side of history here and continue to move in a direction that feels diversity on their own as a choice, not as a check-a-box program. That I think is where some of the frustration came from. So I'm eagerly watching this trend, but it's certainly a choice that leaders will have to make. And the research is pretty clear here. Diverse companies will outperform those that are not.
Well, so are you saying that folks who look at this from the perspective of the free market and they say to themselves, well, I want the team that does the best job, then inherently it will be diverse and sort of the market will solve this?
I hope so. I mean, at the end of the day, though, we are human, and we certainly know that there's bias out there. And so I do encourage, especially like HR professionals, this needs to be regulated within your own company. You need to have the policies and programs in place that make diversity easy for your organization. And so, again, this is going to be something that companies are going to have to tackle on a base-by-base basis. I want to see the free markets are going to work here, but I'm also realistic and know that as humans, we are biased. And so sometimes it may be a biased free market going on, which is why we still need to make sure that we've got the leadership programs in place to make this easy for leaders today.
Hey, Kelly, one last question. Just got about 45 seconds, excuse me. That would be a long question or a long response. First Fed meeting is next week, dual mandate, of course, watching inflation and the labor market. How would you describe the U.S. labor market right now? You guys have an interesting, unique vantage point. So how would you describe it right now?
Yeah, right now, I think the labor market is in transition. We see this at Upwork today. We're moving into much more specialized skills. As companies get smarter with how they're using AI, it's becoming much clearer where they need the talent. And so we're a labor market in transition, and those that are being able to upskill and reskill and keep alongside of this technology, I think are going to continue to be employed. And we're certainly seeing that on the freelancer side.
All right, great to catch up with you. Thank you so much. Kelly Monahan, she's Managing Director of the Upwork Research Institute. As we remind you, it is the research arm of the platform Upwork, joining us from Orlando, Florida. All right, folks, we are just about 26 minutes away from the closing bell. A reminder, next Wednesday is that first Fed decision of 2025. So, of course,
next
Bloomberg
Wednesday?
will have cross-platform coverage of that decision. I know.
Wow.
Surprise! Yeah, first one of the year. And then the next one won't be till about mid-March.
Time flies.
When you're having fun. No, exactly. I don't know that much is expected, right?
No, it's not.
Yeah, so it's more.
I've been wondering why we
pushing.
haven't been hearing from those Fed officials.
Getting a little quiet. All right, we're going to continue our march towards the closing bell on this Thursday. You're listening and watching Bloomberg Business Week. Carol Master along with Tim Stanovic. Stocks still pretty much hovering near their best levels of the session. Coming up, we drive to the close on this Thursday.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index at 6,100. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading mixed right now. The Dow currently up 300 points. S&Ps are higher by 12, but the NASDAQ is down by 30. The U.S. 10-year yield at 4.64%. Gold is little change. Oil trading in the red, and Bitcoin, that's higher by 1%. Among the main 11 S&P sectors, leaders were healthcare and industrials. Tech was in the red, and leaders to the upside in the Dow, Caterpillar and Boeing, while travelers led to the downside. In the gaming space, Electronic Arts plunged as much as 19% after cutting guidance. And in other news, Trump says he will ask OPEC to lower oil prices and demand lower interest rates. Wrapping things up, some of the names pointing after the bell tonight include Intuitive Surgical and Texas Instruments. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got just about 19 minutes left in today's trading session, counting you down to the close on this Thursday, January 23rd, making sense out of news, certainly top business news and market-moving news, whether it was President Trump making some comments out of Davos, which certainly sent oil a little bit lower, but sectors continuing to watch.
Yeah, taking a look at the S&P 500, we are up 0.2%. The Dow up 0.7%. The NASDAQ down 0.2%.
All right, we want to go back to the White House, to the nation's capital. That is where President Trump recently has been signing some more executive actions. This is a playback from earlier today.
So that should take us to the forefront, right?
Absolutely. We got to win.
Okay. Thank you. And this, David, is?
Yeah, this is the crypto EO. We're going to be forming an internal working group to make America the world capital in crypto under your leadership.
Which is really going up, right?
Absolutely.
All right, David, that's for you.
Thanks, sir.
You find them exciting? They might not be exciting, but they're going to make a lot of money for the country.
Thank you, sir.
And so is David. You have to check him out. There's nobody like this guy. They said, how did you get David Sachs? How did you do that? And he's doing it for the country more than anything else. So we appreciate it, David. Thank you very much.
This is an executive order establishing a presidential commission, an advisory commission on science and technology.
Good. Do you want to explain that a little bit?
The basic idea is to get together top people from government, the private sector, technology industry, as well as educational institutions, to make sure that America maintains its leadership position with respect to science and technology development in the years ahead.
Good. That's great.
Next, sir, we have a presidential memorandum encouraging departments and agencies in your government, including the Department of the Interior, to promote federal recognition of the Lumbee tribe of North Carolina.
I love the Lumbee tribe. So this is their first big step, right?
This would be a huge step for them.
Yeah, they were with me all the way. They were great. North Carolina, Lumbee tribe. Okay, you'll send them a copy of that?
Yes, sir.
They were great. Okay.
And if you'd like, I could get them that pen, sir, as well.
Yeah, let's do that.
Next, we have a set of pardons for peaceful pro-life protesters who were prosecuted by the Biden administration for exercising their First Amendment rights.
Do you know how many?
I believe it's 23, sir.
23 people were prosecuted. They should not have been prosecuted. Many of them are elderly people. They should not have been prosecuted. This is a great honor to sign this. They'll be very happy. So they're all in prison now.
Some are out of custody.
It's ridiculous. Okay.
Lastly, sir, we have an executive order ordering the declassification of files relating to the assassinations of President John F. Kennedy, Senator Robert F. Kennedy, and the Reverend Dr. Martin Luther King Jr.
That's a big one, huh? A lot of people are waiting for this for years, for decades. And everything will be revealed. Okay? Give that to RFK Jr.
Yes, sir.
Okay? Okay, thank you very much.
Mr. President, a U.S. judge temporarily blocks the birthright citizenship order. Do you have any reaction?
No, obviously we'll appeal it. They put it before a certain judge in Seattle, I guess, right? And there's no surprises with that judge.
Mr. President, Senators Collins and Murkowski have now said they will vote against Pete Hegseth. Are you worried about his confirmation and your reaction?
No, and no surprises there. It's too bad. You know, it's the way it is. Too bad.
And when would you adjourn Congress to make recess appointments, Mr. President?
Well, I'd take a look at that. I'd listen to John Thune. He's doing a fantastic job. We're moving along. The Democrats are trying to delay government, as they always do. They can't help themselves. Even John Ratcliffe, who's very, very strong, very popular, and liked by the Democrats. I guess he gets a lot of Democrat votes. That's taking a long time, and it shouldn't be taking a long time. They're maxing everything out so they can delay everything as much as possible.
Does Senator Thune support an effort to use recess appointments if you choose to do that?
I'd be willing to use recess appointments. It's up to John. We'll see. John Thune's a great guy, great senator, knows his stuff inside out and backwards, but I would use recess appointments if he wants to do that. Absolutely. The Democrats are just delaying. They always delay.
Mr. President, you spoke with the Saudi Crown Prince yesterday.
Who?
The Saudi Crown Prince. How was the call?
Great.
And they said $600 billion they can invest.
600. I'll ask him for $1 trillion.
You said you're going to ask for $1 trillion. Will Saudi Arabia be the first foreign country you would visit since they invested that much?
Well, if they do that, I would. Yeah, I would be glad to do that. I did it. As you know, 4 years ago, we did $450 billion, meaning the money all goes to American companies, and they purchase jets and they purchase computers and everything else. And we did $450 billion, and I guess we're at 650. And I'll see if I can talk him into it.
I don't think the Middle East again. You showed great confidence in Steve Witkoff. Why you said that you doubt that the ceasefire in Gaza will hold, since you appraised his
Well, no, I think he's great,
efforts?
but it's a very tricky place. It's very tricky. We'll see. And if something does happen, they will not be happy.
Sir, follow up on that one. In terms of Steve Witkoff, are you going to put him in charge of Iran's strategy, and do you want him talking directly with the Iranians?
No, but he's certainly somebody I would use. He's done a fantastic job. He's a great negotiator. He's a very good person, a very popular person, gets along with people. I have great negotiators. They have no personality whatsoever, and then I have some that do. Steve has a wonderful way about him, and people like him, and even in this case, both sides like him. And he was able to make a deal. That deal would have never been made without Steve. the Biden people couldn't make the deal. They were working on it for a year and a half. They couldn't make a deal. We got it done prior to the inauguration. We said it has to be before the inauguration. I mean, the deal should hold, but if it doesn't hold, there'll be a lot of problems.
Related to your AI, EO, just hours after you made that big Stardate announcement, Elon Musk tweeted that they don't actually have the money. Is that true?
I don't know if they do, but they're putting up the money. The government's not putting up anything. They're putting up money. They're very rich people, so I hope they do. And I mean, Elon doesn't like one of those people, so.
Are you worried that AI is going to replace many American jobs?
No,
Does that worry you?
no. It's going to create tremendous numbers of jobs. It's going to also create a lot of benefits medically for cancer research and other things. It's going to have a huge positive impact. And, we want to be ahead of China. We're right now way ahead of China. David Sachs is one of the all-time experts. That people are amazed that you just met him. I don't know if he's still here. There he is. But one of the most respected people in that world. It's a world. It's a whole different world. And we're ahead of China now because of what I'm doing. And I think it's going to be very successful.
Mr. President, please, you just asked the Davos Forum again that NATO countries should spend 5% of GDP on defense.
Yeah.
The United States don't spend 5%.
Well,
Do you think it
I
should
don't
also
think so.
apply to the United States?
We're protecting them, They're not protecting us. We're protecting them. So I don't think we should be spending. I'm not sure we should be spending anything, but we should certainly be helping them. But they should up their 2% to 5%, yeah.
Mr. President, you said earlier during your speech at Davos that you would like to see interest rates come down. How much would you like to see them come down?
A lot. I'd like to see them come down a lot, and oil prices will come down. And when oil prices come down, everything's going to be cheaper for the American people and actually for the world, but for the American people. So I'd like to see oil prices come down. And when the energy comes down, that's going to knock out a lot of the inflation. That's going to automatically bring the interest rates down.
Are you worried that there's too much going on?
You said that you would demand.
Are you worried that there's too much going on at once if you're trying to bring interest rates down, get the economy back going?
No, it just works that way. I mean, it just economically works that way. When the oil comes down, it'll bring down prices. Then you won't have inflation, and then the interest rates will come down.
You said that you would demand that the interest rates come down.
Well, I would.
Do you expect
I would put in a strong statement.
Do you expect the Fed to listen to you?
Yeah.
Are you going to talk to Powell about this and bringing the rates down?
At the right time, I would.
Sir, do you plan any of the people you pardoned that were participated in the January 6, 2021 attack? Do you plan to meet with any of them or meet with them at the White House?
I don't know. I'm sure that they probably would like to. I did them something important, but what they did is they were protesting a crooked election. I mean, people understand that also. And they were treated very badly. Nobody's been treated like that. So I'd be open to it, certainly. I don't know of anything like that, but I think they're going to meet in some of the congressmen, women want to meet. But I'd certainly be open to it.
Have you spoken to them since you issued the pardons?
I haven't spoken to any of them yet, but I know they're very happy.
Mr. President,
I gave them their life back. Their life was taken away from them unnecessarily and unfairly. I gave them their life back, so I can imagine they probably would like to.
Mr. President, what does it mean when you said that Biden took bad advice and not pardoning himself yesterday?
Well, he did. I think he did, because he pardoned all these people that are crooked as hell. Look, the congressmen, they're crooked. What they did is they destroyed evidence. When you destroy evidence, especially criminally like that, they did it criminally. And the reason they destroyed the evidence is because it proved that I was right. They didn't destroy evidence for no reason. They destroyed it because they found many documents saying that I offered 10,000 soldiers. If they had 500 soldiers or National Guard, there would have been no problem. If they had 200, that would have been. I offered 10,000 if they needed them. There would have been no problem. That's been now totally disproven. And it's also been disproven by Nancy Pelosi's daughter, who has her on tape saying it was her fault, that she has full responsibility for this. And they have all this stuff. They destroyed everything. And they go through a year and a half, 2 years of nonsense. They come up with tremendous evidence, and they destroyed evidence. And Schiff knew about it. That's why he's on there. He knew all about the destruction of evidence. A lot of people said he's the one that got him to do it. And he's a crooked guy, totally crooked politician. And so he's pardoned, and some other people are pardoned. And these are crooked politicians, every one of them. Benny Johnson, what he did is incredible. I mean, he was the leader of the committee, and he did it. Cheney, crying Adam Kinzinger, all of them. They destroyed evidence and deleted everything. There's nothing. There's no evidence now. They're crooked politicians, and they should be punished. You know, that's even in a civil trial, you go to jail for a thing like that. They destroyed every document, from what I understand, every document, because it proved that I was totally innocent.
Do you plan to send up to 10,000 troops to the southern border, sir?
Yeah. Oh, southern border?
Yes,
when
the
you
border.
say southern border, when I said 10,000 troops, I was referring to the capital.
Oh, I see. And
No,
when
you
does
gotta
that?
look.
When
I
do
was
you
referring to
plan?
the
When do you
capital.
plan
I
to do
offered
that?
10,000 troops to the capital before January 6th.
And as for the 1,500 at the southern border, sir, to clarify, what exactly do you want them to be doing right now?
Making sure that the border is safe and secure, and that criminals don't come into our country.
Mr. President, do you think that sanctions on Russia will force President Putin to negotiate?
I don't know, but I think he should make a deal.
Mr. President, does it bother you that Elon Musk criticized a deal that you made publicly, that he said that he tweeted that?
No, it doesn't. He hates one of the people in the deals.
Have you spoken to him since then?
No, I've spoken to Elon, but I've spoken to all of them, actually. No, the people in the deal are very, very smart people. But Elon, one of the people he happens to hate, but I have certain hatreds of people too.
Sir,
you know?
Sir, on China, what do you think Xi Jinping can do on the Ukraine-Russia war?
Which one?
The Ukraine-Russia war. What can Xi Jinping do about that?
China?
Yeah.
They have a lot of power over Russia. They supply energy to Russia. And Russia supplies energy to them. They supply other things to, you know, it's really a very big trade. It's a very big trading partner. But Russia supplies a lot of energy to China. China pays them a lot of money for that. And I think they have a lot of power over Russia. So I think Russia should want to make a deal. Maybe they want to make a deal. I think from what I hear, Putin would like to see me, and we'll meet as soon as we can. I'd meet immediately. Every day we don't meet, soldiers are being killed in a battlefield. And that battlefield is like no battlefield since World War II. That's
You said that Ukraine wants
and
to...
I have pictures that you don't want to see. Soldiers are being killed on a daily basis at numbers that we haven't seen in decades. And it'd be nice to end that war. It's a ridiculous war.
You said that Ukraine's ready to make a deal. Did President Zelensky tell you that personally?
Yeah, sure. He's ready to negotiate a deal. He'd like to stop. He's somebody that lost a lot of soldiers, and so did Russia. Lost a lot. Russia lost more soldiers. They lost 800,000 soldiers. Would you say that's a lot? I'd say it's a lot.
Mr. President, you said that you wanted to make Dr. King's dream a reality. What's your response to his children and civil rights leaders who say that your DEI orders are a contradiction of his dream and could further drive racial disparities?
Well, I haven't heard that.
Mr. President, you put the Houthis back on the terror list. How do you see the war in Yemen end?
Well, we'll see what happens, but they can't shoot down our ships, the Houthis.
Yes.
And that you can't shoot down our ships or any ships, and that's what they've been doing. So they're on the terror list. That's not good for them.
Sir, why did you revoke security protections for former Secretary of State Mike Pompeo and Brian Hook?
Well, the same reason I did. When you have protection, you can't have it for the rest of your life. Do you want to have a large detail of people guarding people for the rest of their lives? I mean, there's risks to everything.
So would you support striking Iran's nuclear facilities?
Say it?
Would you support Israel, for example, striking Iran's nuclear facilities?
Well, I'm
or
not
do you
going to
believe
answer
in
that.
diplomacy?
Obviously, I'm not going to answer that question. We'll have to see. I'm going to be meeting with various people over the next couple of days. We'll see. But hopefully that can be worked out without having to worry about it. It would be nice. It would really be nice if that could be worked out without having to go that further step.
And who are you going to meet with?
Well, I'd rather not say that, but very high-level people. But hopefully that can be worked out. You know, look, Iran hopefully will make a deal, and if they don't make a deal, I guess that's okay too.
And Mr. President, just to follow up, you said you think the Fed should listen to you. Can you elaborate on why you think it should?
With regard to interest rates?
Correct, yes.
Because I think I know interest rates much better than they do. And I think I know it certainly much better than the one who's primarily in charge of making that decision. But no, I'm guided by them very much. But if I disagree, I will let it be known.
So your tariffs planned for China and Mexico are much tougher. Or the ones for Canada and Mexico are much tougher than the one for China. Why is it softer for China?
Well, China's already paying a lot of tariffs because of me. And when you add them up, I would say, you know, they're paying a lot. They paid hundreds of billions of dollars. They never paid 10 cents until I came along. When I came along, they've paid hundreds of billions of dollars. Never paid anything. And so they've already started at a higher base.
Is February 1st the date for Chinese tariffs as well, sir? February 1, or was that just Mexico and Canada?
It's Mexico and Canada, but we're talking about China too. Look, China's sending us tremendous amounts of bad drugs, fentanyl, really bad stuff. Most of it comes through Mexico. And we're losing, I think, 300,000 lives a year because of that. People say 150, 100, 120. I think 300,000 lives a year. Those are old numbers. The lower number is a low number. And we can't have that. They've got to stop sending it. I had a deal with President Xi, but it was a deal that wasn't followed up by Biden, of course, where they were going to issue the death penalty to people that make fentanyl, and that would have stopped it. But we'll have to stop it with tariffs. Okay, thank you very much, everybody.
All right, guys.
Thank you, Mr. President.
Thank you, Mr. President. Thank you, guys. Hey, press, let's go. Thanks, guys. Nope, guys, let's go. Time to go. Thank you, guys.
All right, everybody, you've been listening to a playback from an earlier signing of some executive orders by President Trump in the Oval Office, and then taking some questions from members of the press community. This was about 3:10 p.m. Again, a playback of what happened. In terms of the executive orders, let's go through them. President Trump signing executive actions related to cryptocurrency and artificial intelligence. The crypto order creates a working group to advise the White House on digital asset policies and will submit a report to the president within 6 months. The actions aiming to bolster the crypto and AI industries, with Trump's advisors saying they will, quote, make America the world capital on crypto and allow the U.S. to dominate and lead the world in AI. But not quite sure exactly what the specifics are in terms of what these all mean.
Yeah, the group will be tasked with submitting a report to the president within approximately 6 months, recommending a regulatory framework and legislative proposals, including evaluating the creation of a digital asset stockpile. So that would be like
the reserves.
Like a strategic Bitcoin reserve. David Sachs was in there. He's White House AI and crypto czar. A lot of folks know him from the podcast that he did over the last few years. He's a Silicon Valley mainstay. Right. He had Yammer for years. He was over at Zenefits as well. He's a longtime investor in Silicon Valley, part of the PayPal mafia as well. Some other orders that came too, Carol. The president signed an executive order he said would declassify documents related to the assassinations of U.S. President John F. Kennedy, Senator Robert Kennedy, and civil rights leader Martin Luther King. Trump had promised to release the documents during his first term in office, but ultimately relented to requests from the intelligence community to keep much of the classified material under wraps. But the president reiterated his pledge during the most recent presidential campaign.
And I think what was maybe most of interest, because these executive actions, these are things that the president lays out, but ultimately there can be working groups, research done, and then we'll see whether or not there's any actual actions or initiatives or policies that come out of it. So there is some time to be had. Having said that, we did also hear reporter questions to the president in the Oval Office. And I think what was of interest as we think about next week, the first Fed meeting of 2025, he did talk about interest rates and saying that he would speak to Jay Powell at the right time. He has said he would like to see interest rates come down a lot. He'd like to see oil prices come down, and kind of making the connection between the two. But as we know, as we study markets, it's a little bit more complicated. That he did also reiterate the February 1st date for tariffs on Canada and Mexico. So some particulars still to be known, but kind of laying out some of the things that we have heard from the president in these first few days of being in office.
And we're going to have much more on what happened in Washington, D.C. today. Gregory Cordy is going to be joining us in just a few minutes. In the meantime, we did see markets close today, Carol Master, and we also have earnings coming out as well. Another record, or a new record, I should say, closed for the S&P 500 today. For more, we are going to get over to Charlie Pellet, who's following everything after hours. Hey, Charlie.
Indeed, and here's what's going on. A late day surge, the Dow, the S&P, NASDAQ, all pushing higher. And as Tim correctly mentioned, S&P at a record 6118, up 32 points. That is a gain of 0.5%. Again, you're on the GIP screen on Bloomberg. You can see the surge in the final couple of minutes of trading. The Dow today up 408, gain there of 0.9%. NASDAQ, the composite index, up 44. That was an advance of just about 0.2%. NASDAQ 100 index also up 0.2%. Broad-based rally today with the Russell 2000 index of small cap shares gaining by just about 0.5%. But to repeat, S&P 500 index 6118, closing above 6100. That is a record up 0.5%. 10-year 4.64%. The 2-year 4.28%. Gold down 0.1%, 27.53 the ounce. West Texas Intermediate crude lower by 1.6%, 74.25 a barrel. So what is on the minds of investors? Jason Bottenfield is managing director of Park Cities Group at Stewart Partners, and he was a guest right here on Bloomberg Business Week.
Unfortunately, the story goes back to inflation. It's the biggest thing. I think a lot of our individual clients don't think of it that much. They do look at kind of the more scintillating news facts that come out, whether it's elections or policies or regulations or what's going on, but it really isn't. It really is the inflation picture.
After the bell, we heard from Texas Instruments. First quarter EPS forecast missed estimates. TI also sees first quarter revenue in the range of $3.74 to $4.06 billion. Estimates $3.88 on Texas Instruments. After hours right now, we have got the stock declining. TI down by just about 3.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. CSX also out with earnings. That stock down about 2.5% here in the after hours. And Intuitive Surgical also out with their latest quarterly results and outlook, and that one rallying up about 1.5%. We'll have some more details in just a moment. We do want to head, though, out to D.C., just coming off of that playback from Donald Trump, President Donald Trump in the Oval Office, signing some more executive actions, also making some commentary when it comes to interest rates, Jay Powell, and more. Gregory Cordy is Bloomberg News senior White House and politics correspondent, joining us right now. Gregory, these, first of all, executive actions, you have been so smart in saying these are actions. It doesn't necessarily mean a change in policy and so on, but put them into perspective, what we need to know, what we just got from the president.
Yeah, in some cases, really all they do is change policy. And by what I mean by that is that a lot of these executive orders start with a preamble that just sort of sets out really broad contours of the policy shift that we're going to see from the Biden administration to the Trump administration. So, for example, one of the executive orders that he just signed on crypto really sort of lays out this sort of a philosophy change. He wants American leadership in AI and crypto. He wants data centers to be built here. He wants digital assets to be mined here. And the details of those policies really have yet to take shape. We're still analyzing these orders just as they're coming in. It sometimes takes us a while to actually get the paper on these. But very often what happens is that all these early executive orders do is that the president asks his advisors to come back, give me a report in 30 days, 60 days, 120 days, whatever that deadline is, telling me what actions we can take in the future. So these are broadly symbolic executive orders. I don't want to go so far as to say they're press releases, but there's not a whole lot of meat on the bone right now. It's President Trump putting down markers on where he wants policy to go.
Yeah, Gregory, really good point. And in this case, that crypto order creates a working group to advise the White House on digital asset policies, and it will include the involvement of key federal agencies. Cryptocurrency, taking a look at CRYP Go on the Bloomberg terminal, Bitcoin's down about 0.9%, off of that record reached earlier this week ahead of the inauguration. What about, though, these executive orders related to declassifying the materials around assassinations of MLK, RFK, and JFK. It was something the president promised to do during his first administration, but he got pushback from the intelligence agencies. He's doing it now, though.
Yeah, there's a little bit of deja vu on this one. The big difference is that this order also brings in Robert F. Kennedy Sr., who was the father, obviously, of RFK Jr., who is Trump's nominee to be Health and Human Services Secretary, and also Martin Luther King Jr. The John F. Kennedy records were required by Congress to be declassified unless the president could sort of articulate a very specific objection from the intelligence community. The intelligence community raised that objection the third term. This time, if we take President Trump at his word from the campaign, he means that he wants all the records declassified. From what we understand, there's probably a very few records. And we are told sort of not to get our hopes up that this will fundamentally change our understanding of history, but obviously this is something that many Americans have been waiting to learn more about since that fateful day in 1963.
All right, going to leave it on that note. Listen, we know it's busy out there for you, but always appreciate your perspective on all of this. Gregory Cordy, Bloomberg News, senior White House and politics correspondent, joining us from our bureau in the nation's capital.
Well, President Trump making comments at Davos earlier today, they were wide-ranging. He touched on tariffs, and he told leaders a key push in his second term would be using tariffs to drive manufacturing back to the United States. Here's what he said, Carol. If you don't make your product in America, which is your prerogative, then very simply you will have to pay a tariff. Differing amounts, but a tariff which will direct hundreds of billions of dollars and even trillions of dollars into our treasury. So maybe kind of like pour one out for the folks at the companies who are thinking about supply chains globally.
It gets more complicated. Per Hong regularly speaks with those folks. He's partner in strategic operations and performance practice at the global management consulting firm Carney. He joins us from Davos, Switzerland, where we know it's a bunch later. Per, good to have you here with us. First of all, I got to ask you, the Trump event, the Q&A today, I am curious. Our understanding is that the only thing everybody wants to talk about is the Trump administration, but give us your perspective in terms of some of the conversations around today and around the new president, well, second term of the president, once again.
Well, thank you for having me, Carol. And indeed, this has been. I'm speaking from Davos, and many of these reflections from what we've been hearing. Now, I've been coming to Davos for a number of years now. I mean, this is and I've been here a number of times. I think the most succinct takeaway or distillation that I heard in the conversations I was having, Adi Ignatius, the chief editor of Harvard Business Review, in a conversation I was having with him this morning, described it as a real juxtaposition and contrast between Davos man on the one hand and Mar-a-Lago's man on the other. Really a contrast and a very different feel to maybe some of the past Davoses that have been a part of. Some very strong similarities, but some important differences, particularly in light of these announcements that you've been discussing.
So Davos Man, it's also the title of a book by Peter Goodman. We've spoken to him about that a couple of years ago. We know who Davos Man is. Who is Mar-a-Lago's man? Well, I mean, Mar-a-Lago's man, we maybe heard from today. I think this contrast, Davos, the Davos man, the globalist, the individual, and certainly Dr. Klaus Schwab's vision 55 years ago was bring together this group of business and public sector and academia together to really discuss and debate some of the most salient, important issues in the spirit of building a better future collaboratively. Mar-a-Lago's man, I mean, that's a turn of phrase, but much more focused on the now, talking about the importance of being present and driving some of the opportunities, particularly around trade, tariffs, export controls, and some of the other impacts, deregulation to incent U.S. business perhaps, and really reassert U.S. politics or U.S. back in the center of many of the dialogues here that are less global or
maybe a little bit more transactional.
Well, so Per, what does this mean? We brought you initially on to talk about supply chains and what this means. I was listening to a great conversation on our Bloomberg surveillance earlier today, and it talked about, is globalization dead? And they're like, no. But I am curious what it means, because we've talked a lot about nearshoring and, onshoring in terms of global supply chains, redundancy in terms of supply chains. But what is really happening?
Well, part of the context in terms of what's really happening is also acknowledgement that supply chains have been shifting significantly. Over there has been a trend towards, we call it deglobalization or more localization. Coming out of the pandemic, many of the shortages and disruptions that we're experiencing, global supply chains, have been driving, have been rewiring, increased nearshoring efforts, diversifying dual supply, the use of advanced technologies like AI, which was very much on display here in Davos over the last week to adapt their products and services. But in light of many of the pronouncements that we're starting to see, pressure on global supply chains will reach a critical inflection point in 2025.
What are you hearing?
Onus on supply chain leaders to adapt.
So what are those leaders telling you right now? Because that's what we really want to know. I mean, your job is to advise them. You speak to these folks all the time over at Kearney. What are you hearing from them? What are they concerned with, and what are the changes they're making?
Well, there are. I describe the overall tone, certainly in the conversations we've been having here, is some measured optimism, or optimism with some caution. Many of the changes that have been described, on the one hand, within the business community around new policies, around deregulation, tax incentives, simplification, very much can supercharge the investment community and really spur, a fresh wave of growth, particularly in sectors like banks and financial services and fossil fuel producers and big tech, certainly with reduced antitrust regulations, perhaps potential some fewer restrictions. But that measurement, and maybe where a lot of the caution comes in, is, or maybe where some of that optimism or where that potential is muted, is by a real sense of uncertainty. And while the extent of the incoming Trump administration's tariff policies and export controls is unknown, he has previously spoken about his desire to levy 10 to 20% on most imports, targeting up to 60, even 100% tariffs on China. And that can have, and there's much at stake for a global economy and for global supply chains if that manifests itself.
Yeah, especially if it gets to something as steep as you suggested, or he has suggested. But I guess, as they say, the devil's in the details, and we'll have to wait to see ultimately what comes down from Donald Trump and his team. Per Hong, thank you so much. Really appreciate you saving some time for us. We know it's later over there in Davos. Per Hong, he's partner in strategic operations and performance practice at Kearney, as we said, joining us from Davos, Switzerland. All right, you are listening and watching to Bloomberg Business Week. Coming up, Tim, we're going to dig into
the gender gap
again,
but
still a thing.
This time in healthcare.
Yeah, which is interesting.
Yeah, and what one organization is doing to try to close that gap. That's next on Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index at a record. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Just getting word that J.P. Morgan Chase is boosting CEO Jamie Dimon's pay to $39 million from $36 million. Dimon and his family also plan to sell about 1 million shares. Dimon will be selling for financial diversification and tax planning reasons. But again, headline right now on the Bloomberg, J.P. Morgan Chase boosting CEO Jamie Dimon's pay to $39 million from $36 million. Stocks closed at records. Oil fell after President Trump urged OPEC to lower crude prices, saying he will be pushing for interest rate cuts. The S&P 500 index up 32, up 0.5%, 6118 on the S&P. Again, a record there. The Dow up 408. Up 0.9%. NASDAQ up 44, higher by 0.2%. A lot of the gains coming in the final few minutes of trading. 10-year 4.64%, the 2-year 4.28%. Gold down $3 the ounce, down by about 0.1%. And Bitcoin down 1.2%, 102,785 on Bitcoin. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Carol, when we talk about the gender gap, we're often talking about gaps in education or political participation or salary.
Right.
But there's also a pronounced gender gap when it comes to healthcare. I confess, I had no idea about this until I started researching our next guest.
I mean, share these numbers.
Okay, so I was doing some research. There was this report from McKinsey about a year ago. They released it around Davos, actually, 2024. Women spend significantly more time than men in poor health, on average around 25% more time. It's surprising to me.
I'm not surprised.
Because men live longer.
Yeah.
I mean, sorry, women live longer in general.
I guess, but I often hear about when women will go in to a doctor and say something, and they are very dismissive, like, oh, it's just this or just this, and yet it turns out to be something more serious.
Okay, well, McKinsey says that closing this gap could add as much as $1 trillion to the economy by 2040. But perhaps more importantly, it could add 500 healthy days to a woman's life over her lifetime.
All right, that seems like a really good thing. Carolee Lee is working to close that gap. She's founder and chief executive officer of WHAM, which stands for Women's Health Access Matters. It's a nonprofit that encourages research and investment in women's health, as well as works to, in the organization's words, quote, eliminate the inequities and bias in research and enterprise. She joins us right now from Greenwich, Connecticut. Carolee, it's great to have you here with us. Just paint the picture. I have heard anecdotally from many women, young, older, where they do walk in to a doctor and say something and they're very much dismissed. But tell us about this poor health care or poorer health care that women are dealing with versus men.
Sure. Well, first of all, thank you. Delighted to be with you. So let's just frame the picture a little bit. Women are 51% of the population, same about in the workforce. They make 85% of the spending decisions and 80% of the healthcare decisions. Okay, so first of all, let's start with we're not a niche market. And then you have to really look at, where we're lacking. And if our first reports, which came out 4 years ago that we did with the RAND Corporation, showed how little money is invested in women's health research. In fact, NIH invests less than 4%, for example, in heart disease, when it's the #1 killer of heart disease. So there are tremendous disparities between the incidence and the burden of disease and the amount of monies invested, whether in research or in business development.
Can I ask you why that happens when it comes to research in women's health? Why does that lag?
There's a lot of answers to that.
Is it just biasness? Is it men in charge making the decision about where the money is spent? What is it?
Yeah, I think for many years, unfortunately, there was bias, intended and unintended, and it just grew into the system. And in many situations, women are not at the table, and we as frequently or as in the kinds of positions that they should be. And we know that these kinds of inequities don't create or generate the same kind of results when you have sex differences in the room. And you need to have men and women in the room and making these decisions.
So let's talk a little bit about how to solve this and what you are doing over at WHAM, who you're partnering with, who's getting involved. How is this a problem that gets solved?
So it's not going to be easy to solve, but the first thing is to create greater awareness. So, for example, I just spoke in several different instances in delivering the findings from our new WHAM report out at the JP Morgan Health Conference. And that's important for a lot of reasons. One is the report itself, which is available online, obviously, at our website, whamnow.org. It really paints the picture of what every investor should know. And part of what we're trying to do now is change the investment community. Our first reports did show how to change the research community and investment by showing that in 4 disease areas, and I mentioned heart disease as one, in 4 disease areas that would affect a woman in her lifetime, a $350 million investment, which is what NIH had allocated to those 4 disease areas, would have yielded a return, if just increased by a small percent, would have yielded an economic return of 14 billion to the economy. There's no.
What is that economic return? You know, we're into economic statistics and so on and so forth. Are you just saying that healthier women are much more productive in terms of economic output? Is it as simplistic as that? Okay.
That's part of it, and it's also obviously taking care of their families, all the different costs that are involved in either treating a disease and or being out of work because of inadequate care or because of diseases that make you not be able to stay in the office, such as menopause. It's not even a disease, it's a condition. But the numbers of hours that are lost, both to the woman in terms of her earnings and to the company, are extensive. So I think one of the first things that we have to realize is that one of the things we need to do is not just think of women's health as reproductive health. And so what we've done is try to redefine women's health to be exclusively, disproportionately, or differently. And that is an NIH definition, by the way, because exclusively means things like, let's say, more gynecological issues like menopause, ovarian cancer. Disproportionately is autoimmune diseases where women are 80% of the people have autoimmune. How about Alzheimer's, where we're 2/3 of the population and twice as likely to have Alzheimer's? And guess what? We don't have the research to show us why. So if we don't have the research, then you can't even begin to think about it.
Is it because we live longer? Don't we still live longer, women?
No.
But why is my life insurance more expensive than my wife's? They told me it was more. They told me my wife's is cheaper because she lives longer.
Yeah, I think that's not true, but it's a great question. I'm not qualified to answer that one, but all good questions. I mean, women live on average 5 to 6 years longer and in poor health. We know that, and with inadequate finances.
So we do live longer, but in poor health, is what you're saying.
Correct.
Okay.
That's exactly right.
Okay.
Costs us more, and we don't have the money.
There's a really interesting. Sorry. Go ahead.
Well, I'll just finish the exclusively, disproportionately, and differently. The 2 areas and the 2 conditions that affect women differently are cardiovascular disease and lung cancer, for example, where cardiovascular disease, to your point, Carol, women are go to the emergency room with chest pains and all kinds of issues, indigestion, shoulder pain. And in many instances, they're given an antidepressant. They're told that they're having anxiety, and they're sent home, and they drop dead of a heart attack. Why is that?
I don't know. So, why is that?
Yeah.
I mean,
well, because first of all, because this is women experience some diseases such as cardiovascular disease differently. Not all emergency rooms and not all medical practices are that familiar with these differences. And often if they are, they'll misdiagnose it, which is very unfortunate. But some of the symptoms are, they could be anxiety, but women are not often given the same tests as quickly as a man is.
All right, so listen, those that are heading up medical institutions, hospitals, you have a quote in the study from Michael Dowling, President and CEO of Northwell Health. He has been on our air several times. The quote is, women's health needs innovation and creativity. It needs everybody to look at it in a new way. I have heard from doctors that such a big part of their job is also thinking about money and kind of getting donors to donate money that goes into R&D and so on and so forth. So how do we, I'm thinking about these heads of institutions, if they are aware of this, why aren't we making sure that R&D money gets allocated to more women's health issues?
Well, it is happening slowly, but the problem is this word slowly. In other words, there is more money flowing. And over the past 5 years, there's been a significant amount of money. And I think between 2018 and 2023, the women's health gap grew by 300%. So the amount of research that is being done is growing. It's just not growing at a fast enough rate, and it's not significant enough. And that's a problem. There's no question about it. And I think part of it is the lack of understanding. So, for example, even women's health is such a high growth opportunity. You are focused on economics and opportunity. 5% of the conditions that impact women, a woman in her life are exclusive to women. The other 95% are not. So think about that.
You're saying, like, in terms of investment dollars, companies that are addressing some of these issues, why is it maybe more going into it? Is that kind of the question?
95% of the market is still untapped, leaving a massive opportunity because...
You know, you have some of the companies that are listed in your report, really, really interesting companies that we've had on our air. Maven and KindBody are a couple of those companies that cater to women exclusively that have raised money in the past few years from private investors. Other companies, including Aura, we've spoken to that CEO in the past couple of months. You argue that they treat women differently. Will we see more capital flow to startups because you think it is such an untapped opportunity?
Yeah, I think so. I mean, this is the point of the report, is to lay out the groundwork that says this is a market that's ready for growth. So investments in women's health grew by about 300%, as I said, between 2018 and 2023. So that's a huge opportunity when you think that only 2% of healthcare VC funding was allocated to women's health. Really? 2%? 51% of the population? 2%?
Wow. Yeah,
it doesn't work.
It's amazing, and I feel like we have had this conversation a few times over the last couple of years, so it's disturbing, this in-depth, extensive research that you've done to find that we still have a long way to go. Carolee, I hope we can stay in touch, continue this conversation in the future. Carolee Lee, she's founder and chief executive officer of WHAM, the Women's Health Access Matters, joining us from Greenwich, Connecticut. Do you want to mention Boeing, because the stock down in the aftermarket?
Yeah, preliminary fourth quarter commercial airplane revenue coming in at $4.8 billion. Preliminary fourth quarter defense, space, and security operating margin down 41.9%, coming in, at negative 41.9%. Fourth quarter GAAP loss per share at $5.46. The estimated loss was at $1.32, Carol. And then defense, space, and security pre-tax charges of $1.7 billion. How's the stock looking?
Yeah, the stock's down about 3.5% here in the after hours, so it's certainly going to be a name we're going to watch into the Friday trade. Let me just pull it up here on my Bloomberg. Yeah, now just down about 2%. But the big headline is that preliminary fourth quarter revenue, $15.2 billion. Folks, that's a miss. $16.76 billion is what the street's been looking for and expecting. Keep in mind that they're going to report on January 28th, so in about 5 days from now, before the market opens. So again, coming out with some preliminary results about that quarter.
All right. Well, we did have a record close to the S&P 500 today. Coming up next on a Bloomberg Business Week, what to spend that bonus on? We've got you covered. From, products ranging from a few thousand to a few $1 million. That's next.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Boeing is reporting fourth quarter revenue that missed analyst estimates after a bruising strike that idled most of its aircraft production. Now, citing preliminary financial results, Boeing says sales were $15.2 billion. That is less than the $16.76 billion expected by Wall Street. A day of records for the S&P 500 index. Stocks closing at all-time highs. Oil fell after President Trump urged OPEC to lower crude prices, saying he will push for interest rate cuts. The Dow, the S&P, and NASDAQ all finished higher. In fact, stocks did advance in the final few minutes of trading, with the S&P up 32, ending at a record 6118, up 0.5%. The Dow up 408, up 0.9%. NASDAQ Composite Index up 44, up by 0.2%. 10-year 4.64%, with a 2-year yielding 4.28%. Gold down $2.50 the ounce. A little change, been that way for much of the day at $27.53. West Texas Intermediate crude 74.22 a barrel, down 1.6%. And Bitcoin down 0.8%, back below 104,000, now 103,255 on Bitcoin. Again, recapping here, stocks higher, S&P up 32, a gain of 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, Charlie, thanks so much for that update. I do appreciate it. You did hear from Charlie earlier that JP Morgan Chase CEO Jamie Dimon got a nice little raise, about 9%, $39 million.
Not too shabby. He could kind of buy almost everything on this next list we're going to talk about.
That's a perfect segue, because it is bonus season, and if you're one of the lucky few who are looking for something to spend that money on, rather than spending it on, I don't know, necessities or maybe tuition or student loans or bills or eggs, we've got you covered. Chris Rauser is the editor of Bloomberg Pursuits. He's here. He joins us from New York. So, Chris, we got a lot on this list that I know Carol wants.
Necessities, tuition. Tim, what are we talking about?
I know. We're talking pursuits here. Let's talk about necessities. A cold plunge. That's a necessity, right?
Yeah. So Wall Street bonuses are supposed to be up about 10% this year. So for the Right Stuff page in Bloomberg Business Week in the next issue, we had we brought together a little bit of inspiration and insight from our readers about what they're fantasizing about, what they might want to buy, what the biggest mockers are going to get into this year. And one of them was a cold plunge. Yeah. There's a collaboration between Kohler and Remedy Place, which is sort of a wellness spa company, and you can get a cold plunge in your own house. So you can plunge into 40-degree water and sit in there for up to 6 minutes while you're listening to music and resting on a pillow and presumably screaming and crying.
Or the Bloomberg Business Week, the Bloomberg Business Week podcast. Have you done a cold plunge? Chris, have you done a cold plunge?
I have, but not for 6 minutes.
No. That's what I was going to say. I did 1 minute.
What?
That's what they recommend.
This one, thank you, Carol. You've never done it, so I don't know what you're saying.
I've done cold pools, I've done cold water, but this sounds like,
it also goes
why?
up.
Why?
This one also goes up to 104 degrees, so you can have a nice soak.
Okay, then I'm in.
That's pretty cool.
Chris, I am curious because there's some really great things. What's the thing you would want?
Well, you know the answer to that, Carol.
Oh, that's
I
true.
would want to watch. We have a show, Hard Watch, which has not only a tourbillon, which is a very rare complication, but also a perpetual calendar, which is like the geekiest thing that watch collectors love. It keeps track of the day, month, date, and year across leap years. And Chopard has this new great one, this LUC one, but it is pricey. It's $184,000, and it's just inspiration. You could get something at a wide variety of price ranges for your wrist.
All right, something more akin to that, maybe that I would like. The Cartier neck. I said to Tim coming into this, Chris, I'm like, most of this stuff feels like it's for dudes, but there is something, a Cartier necklace, that women who are getting bonuses might be interested in.
Yeah, so last year actually, was the 100th anniversary of Cartier's Trinity collection, which is you've seen people wearing it, everybody copied it. It's interlocking rings of yellow gold, white gold, and rose gold. And it's become very popular. They've been pushing it for its 100th anniversary, and there's a new iteration of it, which is little squares instead of little rings, and they've done it in rings and bracelets, and this is a necklace, which is just like gold tumbling down your neck, which we really liked.
Okay.
Me too.
You know which one, the thing on this list that I would want, right?
The Stradivarius?
Nope.
The Glenlivet?
Nope.
No.
The speakers?
Nope.
The Francis Malman?
Nope.
The meat?
Yes.
The cooking thing?
The cooking.
Sorry.
He wants the meat.
It's more than just a
This
cooking
is pretty
fire.
cool. You know, I like experiential stuff. Fire cooking with the king. This sounds
Yes.
pretty cool.
So Francis Malman is sort of a legendary chef, and he's famous for, well, also being able to like go out in the wild and like eat things he finds and kills, but also for cooking over fire, and like not a grill, like a fire built with wood with a ring of stones around it. And he will teach you how to do it. And for the first time ever, he's offering little trips where you can go to his private island in Patagonia and you can learn from him for a week. And it seems very cool and very exclusive and just like really experiential because of the land, where it is, what he teaches you, and you can do it with a small group of friends.
All right, so we know if Tim is taking off the dates March 21st through the 30th. I know exactly then what you're doing. It's only, what, $21,400 a pop, Tim?
Yeah, but it's for 5 days.
Yeah, I know.
So that's.
Are you going to take anybody for
It's only like,
$21,400?
you know, $4,000 a day. It's okay.
I mean, Tim, what other 2 people are you going to take other than Chris and Carol?
That's right.
Done.
Carol, we're not allowed to take vacation at the same time.
That's right,
I'm sorry, Chris, it's just
We're not
you and
allowed
me,
to
bud.
fly together. We're not allowed to, no, just kidding. The TV is kind of cool. Can we talk about that?
This, I got to tell you, when we published this list, I started hearing from people all over about this TV. Not only like inside Bloomberg, outside Bloomberg. So LG has a new TV that's coming out, the OLED T, which is a 77-inch TV, and it's transparent. So you know how sometimes people hide a TV, like they have the the frame TV that looks like art, or like it goes down and you sort of like hides behind a bench or something. This is like see-through, so you could put it in front of your view of the Hollywood Hills. You could put it in the middle of a room, and it could just disappear. And then when you want to watch TV, you turn it on, and then and you watch whatever you want to watch. It's very cool, very high definition, and I think it's going to be like the hot thing.
I think I don't hang out in
$60,000
places where I see these TVs.
You do or you don't?
I don't.
Well, it's new, Tim.
Yeah,
I
that's
know.
all. It just
Okay.
hasn't come yet
Okay.
to your
That's
neighbor's
right, yeah.
apartment.
That's right.
Or to your apartment.
That's true. Chris.
$50,000 is a lot for a TV.
Yeah.
There's something on this list
Where are you going?
that is, I think many people would say, priceless. Yet, for a price, it might be yours. We're talking about a Stradivarius.
Yes. So Stradivarius violins, there are actually a fair amount of them still bopping around, and you can play them. They still sound amazing. And one, which was called the Joachim Ma Stradivarius, was owned by the New England Conservatory of Music, and they are auctioning it off this year, next month, so that someone else can buy it, and they're going to use the proceeds to do music scholarships and stuff. And so, but for years it's been in their hands, and students have played it. So they're hoping that it finds its way into an enthusiast's hands. The low estimate is $12 million, and it's the only one for sale currently. So it is a stretch, and it is one of those inspiration things. Reach for the stars, but the previous record is 15.9 million for a Stradivarius, so it could go for more than that.
And if that's too pricey, there is a $6,000 bottle of scotch. Just got 30 seconds. It must be a really good bottle of scotch.
It is Glenlivet 40 year. It's the first time they've had that old of an age statement in a regular production run bottle, and it's very, very tasty. A great investment if you want to buy it and hold on to it, but really we recommend you buy it and you open it and drink it.
Definitely a lot more pricey than the Glenlivet I bought from my uncle a few years back. Cool
Okay.
stuff, cool stuff. Huh?
It's all good stuff.
It is all good stuff. Really fun and fun to go over the list with you. As we said, Jamie Dimon could just buy it all.
He could.
That bonus.
Yeah,
then
he
some.
could.
And then some.
Yeah.
He could buy all of us that.
That's true. I wonder what someone's going to do with the violin. Are
Maybe
they
we
gonna
could go on the
donate it
meet
back
trip.
so people
Chris,
can
you,
play it?
me, and Jamie.
Sounds great.
Jamie, call us. All right, Chris Rouser, love you, the editor of Bloomberg Pursuits. Check it out at on the Bloomberg and also at bloomberg.com/pursuits. All right, we're getting ready to wrap up. Almost. Stick around.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, getting ready to wrap up on the Thursday edition of Bloomberg Business Week. Carol Masser along with Tim Stenovec live here in our Bloomberg Interactive Broker Studio. We are going to talk about Tom Brady in just a moment, but first we want to get to one story that is slowly creeping its way up among the most read in the past 60 minutes. Has to do with Donald Trump and some comments he made about, I don't know, hour and a half ago.
Yeah, the president questioned Federal Reserve Chair Jay Powell's decision-making on interest rates and said he planned to speak to the central bank's chief at the right time. Here's what he said, quote, "I think I know interest rates much better than they do, and I think I know it certainly much better than the one who's primarily in charge of making that decision," Trump said in an apparent reference to Powell while speaking to reporters from the Oval Office Thursday. "If I disagree, I will let it be known." We should point out, Carol, Jay Powell was appointed to the position by President Trump during that first term and then reappointed by President Biden.
Yeah, absolutely. And we are going to get our first Fed decision, by the way, of 2025. That's next Wednesday. Asked if he believed Fed officials would listen to him, President Trump responded, yeah. So coming hours just after he talked to folks over in Davos. So, you know, he has been calling that, you know, he said at that kind of off the cuff, I guess, press conference after signing some executive actions earlier today, saying that he'd like to see lower interest rates, he'd like to see lower energy prices. But yeah, it speaks to something that we have talked about that's so crucial in terms of, I guess, kind of the functioning of our monetary policy and financial system, but that is an independent Fed. And most folks will agree that whether or not you're a Republican or Democrat would agree that we need to have an independent Fed. So we'll see what kind of commentary or pressure might be put
I think
on
the president
Fed chair.
wouldn't agree with that.
No, yeah, but I think those who are in the investing world and landscape would say, you got to make sure you have an independent Fed.
I think there are plenty of example of countries that don't have independent central banks.
Yeah, and they have a lot of problems.
They do have a lot of challenges. They
First
have a
of
lot of inflationary challenges.
Right, and you lose faith in terms of if you're looking for where you want to invest, you want to make sure that you have stable monetary policy, or at least that's thinking about, run by certain parameters.
Trump did tell Bloomberg News during the campaign that he should be able to tell Powell how he thinks interest rates should change.
Now, I can't remember. What did he first go round? Was there some pressure on Powell?
Oh, yeah. He was tweeting a lot about it. When Powell raised rates back during the first Trump term, there were a lot of tweets about the Federal Reserve and about interest rates coming from the president at the time.
Yeah, and I'm seeing all of these headlines from the comments from President Trump saying that he'll demand that interest rates drop immediately. So yeah, we'll see. As we know, there's a lot that goes into those Fed decisions. We talk about it an awful lot here at Bloomberg. The Fed does have that dual mandate in terms of watching the unemployment rate as well as watching what's going on in inflation. It's been a balance, and there's been some concerns about still some inflationary pressures that are out there, and that could be spurred even further as a result of policies out of the Trump administration.
Oh, I thought you were going to try to tie this to real estate.
Oh, no, but please do that.
Okay, yeah.
Go ahead.
I will. Somebody who's not concerned about interest rates and mortgages.
Can we just say this is the most read story on the Bloomberg all day today?
Okay, it is?
Yes.
It makes sense.
In the past 8 hours.
It's a Bloomberg exclusive.
Yeah.
Tom Brady weighing the sale of his mansion in Florida's Indian Creek Island. It's the exclusive enclave known as Billionaire Bunker, where property values have just soared since Jeff Bezos' arrival.
Yeah, the 26 Indian Creek Island Road property is being shown to a small group of potential buyers, according to folks in the know. While there's no official listing, so if you're looking for it up on Zillow, it's not going to happen. Anyway, the newly finished house
I'm looking at it right now.
Are you?
Yeah.
Can you find it?
I can find some information about it on Realtor.com, like a picture of the...
But not from Zillow?
Lots and of the...
Well,
not on Zillow.
It's newly finished. It has already received bids valuing it at more than $150 million, according to those people familiar with the matter, asking not to be identified.
I did find it on Zillow. It has a Zestimate.
A Zestimate?
Yeah, the Zestimate is $28,640,000.
I would say it's a little low.
That is a little low.
Yeah.
Sorry, you were saying what it has?
Yeah. Apparently, he built this Indian Creek home on a roughly 2-acre lot from scratch with plans for a 2-story waterfront house. Has a separate gym and cabana. The lot was purchased for $17 million in 2020, according to property records. So talk about appreciation, if indeed.
He got a good deal on it. It was listed back in 2017, according to Zillow. This is the lot for $29,500,000, and then he bought it for $17 million. In October of 2020.
Yeah, keep in mind, you will know a few of the neighbors that live there because it's kind of an enclave, not for just rich, but for billionaires. Amazon.com founder Jeff Bezos, he's bought 3 properties in Indian Creek since 2023, shelling out more than $230 million. An empty lot next door to his Indian Creek properties is apparently being marketed for $200 million.
I wonder who that person wants to sell it to. Probably Jeff Bezos.
Oh, you mean maybe he wants to buy?
Yeah, he wants to buy
his
the
4th property.
Yeah, he wants privacy, I would imagine.
Yeah. The record for the most expensive single-family home ever sold in the Miami area, though, belongs to Ken Griffin, who paid nearly $107 million for a Coconut Grove estate back in 2022.
Okay.
Yeah. The under construction complex has. Oh no, they're talking about his family. He's rented space I guess, for his family office at a building in Bay Harbor, minutes away from his Indian Creek home. Yeah.
And Giselle's got a house just across the water. That's Surfside, and it looks like that one, according to Zillow, was sold back in 2022 for $11,500,000.
Well, it's already gotten bids for over $150 million. And like we said, what he built, he bought it for $17 million in 2020. So killer appreciation, to say the least. All right, folks, that's going to do it. We're getting